Hi all, welcome to this video. My name is Bram de Haas. I'm the founder of Starshot Capital. Today I'm going to talk about Silvergate Capital, which is a small US bank that's involved in the service industry to the crypto world. Silvergate Capital is like a very controversial stock right now. Let me first say it's not investment advice. Do your own research, learn a lot about this stock before you even consider it. But the reason I'm talking about this is because, well, I'm really interested in it. At first, I was interested in it on the short side. I knew the stock superficially, and I thought it would be very interesting after the whole FTX blow up to find some related short positions, so I could benefit if those would drop, and hedge a little bit of my other stocks that have exposure to the crypto industry that I actually really like for the long term. But after shorting it for a little bit, I quickly found out that this is actually a really interesting company, and maybe I should actually be long because it's under so much pressure. And pretty quickly after I reversed my position and I went long, and it was already like down a lot. I think my average cost is around $30 or something. Right now I think it's 25 or something pre-market. It dropped 4% in the pre-market today, 11% yesterday. I'll get into the reasons for why, but first let me set up this story a little bit better. It's actually a short of Marc Cohodes, who's a very well-known short seller, has a huge following on Twitter. He's been on Real Vision, he's been on Hedgeye, I think the Matt Faber podcast, he's made a recent appearance. I think he's touring right now, lots of podcasts. And I respect him a lot. I think he does great work. He has, exposed real frauds in the past, and also at really, great short trades on. So he's really somebody who deserves a little bit of a following, and he has his following. But it's just that in the case of Silvergate, I'm not entirely convinced he's actually right. He also called FTX in question before it collapsed. So, that's another call where he deserves some props, but he couldn't really benefit from FTX collapsing. I think he went looking for shorts, just as I did, and he ended up with Silvergate as well. But after that, I think the short thesis is a little bit of a reach. And I actually wrote 3 or 4 articles that are available on the Seeking Alpha website, where I publish quite a bit. And in the first one, I'm still short, and then I discover how strong and the balance sheet of Silvergate Capital actually is, and that its exposure to the crypto industry might be modest. And I actually think its growth engine can get started pretty quickly after the market calms down and the whole FTX collapse and the fallout from that is processed by the market. And so far, it doesn't look that bad. There are other firms falling, like BlockFi yesterday, but I think a lot of leverage went out of the industry already because Bitcoin and the crypto industry has been under so much pressure for the entire year. But let's see. Well, okay, so Marc Cohodes is short. He's very vocal about it. A lot of people follow him. And now what I think is happening is that lots of people are buying puts on Silvergate Capital, and some are talking their book a little bit, just as I am right now. But some on Twitter are, going a little bit too far sometimes with like allegations they make against this company, because it really hasn't done wrong anything, or at least there's no proof that it did anything wrong, and it could very well be that they didn't do anything wrong at all. But you can make your own truth a little bit on Twitter, and so a lot of people are trying that. Maybe I can read some of those tweets out to you. Let's see. Silvergate claims to have minimal exposure to BlockFi, at least directly, after having minimal exposure to FTX. At this rate, they're going to have minimal exposure to everything, and thus their equity becomes properly minimized. Don't really know what it means, but it's somebody who kind of questions that their exposure is actually minimal to BlockFi. Here's another one. From an FDIC standpoint, these loans may go in delinquency bucket, aka non-performing loans, if SAN stops performing, and Silvergate Capital inches that much closer to receivership and resolution from FDIC. This is related to, I don't know, he quotes the article that Silvergate has minimal exposure to BlockFi, and there's really no relation to his statement at all, but I think it will make some people nervous. But I'm actually not that concerned that customers of Silvergate are like pulling their deposits en masse, and there's like two reasons that I'm not too concerned. And the first reason is that most of their customers are actually enterprise customers. So these are firms that are active in the crypto industry, and Silvergate has set up the Silvergate Exchange Network, and this allows these firms to trade US dollars with each other through that Silvergate network at no charge. And so if they're trading like a Bitcoin with each other, they can send the Bitcoin through an exchange or just directly between themselves over the blockchain, and then they can wire the equivalent US dollar payment through the Silvergate system. And that allows them to really maybe get better quotes on like large trades, so they can find liquidity elsewhere. They don't have to be on various exchanges. But it can also circumvent some of the costs associated with trading on exchanges, and that makes more trades profitable for these parties, and in that sense, that's very, very attractive for them. And I don't think like these enterprise customers, they're very impressed with the short case, or they'll get nervous from a lot of Twitter messages saying that Silvergate is not a safe place or something, because they'll do their, decent due diligence and not just run at first rumor, unbased rumor. So that's good. And the second thing is that actually, how should I explain this best? Let me pause for. Right, so I lost my train of thought for a second. But the second reason that I'm not too worried about deposit outflows is that most customers are enterprise customers. A lot of them are like traders or trading firms. Maybe a flow traders could have an account with them. I don't know if they do, but it's possible. And there are great trading opportunities right now in the crypto universe because there's so much chaos. People are moving around from this exchange to that exchange. They think the money is safe here, maybe it's safe there. They want to move funds. There's a lot of chaos. Liquidity is not super great. So there are large spreads, great trading opportunities for these higher frequency trading firms. And they really benefit by having capital at Silvergate. And you could easily argue that it's actually a much safer place than, well, at least any of the offshore exchanges. And you could argue that it's safer than any exchange. So I think it's an attractive place for them to have funds. And I think they want to be active right now. So I think that will stem some of the deposits outflow as well. And well, maybe, and like the core of the short thesis is like heavy deposit outflows at Silvergate because of trust issues. But these, there's really no reason to have, that I can identify, to have trust issues with Silvergate. And second, these outflows, I think they will come back pretty quickly, because Silvergate is not a normal bank in that sense. It's really specialized, providing services to the crypto-related industry. I mean, they offer like no yield on deposits if you're like a digital asset customer. And the reason that they don't have to offer like any yield is because those servers are really a value added in themselves. And that's why people have money there. And they actually encourage customers to take money away that they are not actively utilizing, in their business or in their trading activities. So the capital that they have, the deposit base, it's very active, it's very engaged. And because of that high utility that their customers get out of Silvergate, I mean, I think some customers that are not like focused on like high frequency trading, they might, be interested to move money elsewhere for a little while. Maybe another bank that's does a decent job of servicing them. Although I don't think anyone has like a 24/7 ability to gives them a 24/7 ability to move money around. But there are alternatives. So okay, maybe some people move money away, but I think it will quickly come back if there turns out there's really nothing going on there. And I think people will return, and the growth will actually resume, and will be it will be a very interesting stock from here. But it's my opinion, and maybe it doesn't, and it's growth doesn't resume, but I still think it's fairly cheap price. It's trading in line with normal small banks with this kind of balance sheet and of this size. And I think that's way too cheap for a bank that could actually has that optionality of really starting to grow again with the crypto industry once that growth comes back. I mean, that's not imminent. I mean, I realize that. I know everybody's licking his wounds in the crypto industry, and it's not an overnight thing. But I think there's some of the pessimism seems a little bit overdone. Some of the criticism seems a little bit reaching to me on Twitter. I think sometimes claims are a little bit overstated or exaggerated. I actually have an article coming out on Seeking Alpha where I'll go into these claims in a little bit more depth and cover them. I think I have 3 or 4 articles on Silvergate out. You check them out if you want. And I hope you got something out of this video, whether you're long or short, and wish you all the best of luck. And thanks for watching.